Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm privileged to welcome a finance and banking expert from the world of academia, from Kuala Lumpur, Malaysia, Professor Nafis Alam. Professor Alam, welcome to the show.
Thank you, Mr. Ashutosh, for having me.
Thank you. Professor Alam is the professor and head of the School of Business, Monash University, Malaysia. His research is focused on banking and fintech regulation, financial stability, corporate finance, financial market, Islamic banking and finance, financial intermediation, and financial economics. He's also the co-author of 9 books, and given the amazing work that he has been doing, understandably, he's been recognized and felicitated several times. So, Professor Alam, my first question before we get into banking and fintech regulation, tell me about your own amazing journey and what took you to Malaysia.
It's a long journey. I grew up as a young boy in Patna. I did my schooling all the way in one school from standard 1 to 12th. And then I did my undergraduate in economics from Patna University. As any Biharis, I also wanted to be a civil services aspirant. My father was in Bata, India, and he was not very keen because civil service UPSC is not like easy thing to crack. It will take time. So he wanted me to go through the regular MBA, and also, my brother is the mechanical engineer from Aligarh, and he was in Saudi at that time. So I wanted to pursue something not in engineering or medical. So I always wanted to have the civil service or economics background. So that was not, again, family did not want me to go through that. So I ended up looking for MBA, and I did CAT exam in 2001. I had offer from Narsi Monji and XRI at that time of time. I was not able to convert in the interview. I only had the call. So one of my family friend, Professor Arif, was a professor in Islamic University, Malaysia, and that was the linkage. I came to Malaysia to do my MBA, and I never wanted to be an academic. It's like by fate, because when I was growing up, my mother wanted me to be a medical practitioner, a doctor, because another son is an engineer, right? So two professions in India only. So yeah, so when I get into here, I was taught by professors from IIT Chennai. I was taught from professor from Indian Institute of Science, Bangalore. So a lot of Indian academics who really shaped my whole vision of the academic journey. So when I started looking into the research, so I was a research assistant within the 6 months of my MBA program, and I was looking into a national level study on the cybersecurity, and I'm talking about 2001 on mobile banking and all that, which really gave me an insight into the research domain. So I said, why not start a career in academia, and let's explore PhD. My mother will be happy because I will get a doctorate, not a medical doctor, but an academic doctorate. So that led me to pursue a journey in academia, and I did. So I got a scholarship from Monash. I'm a proud Monashian. So now I'm working at Monash, but my PhD was funded by Monash, and I get into PhD program in 2006. My PhD was in banking and finance with a focus on Islamic finance. And I have been teaching for almost now more than 2 decades. So I have taught at Monash University, I have taught at Nottingham University, I have taught at Henley Business School, and now I'm back at Nottingham heading the School of Business. So I'm a pure academician, grown up as an aspiring to be a civil servant, but now educating thousands of kids around the world.
Oh, wonderful. Your journey, I'm much older, but almost resembles mine. Like all traditional Indian families, either you go into UPSC or you become a doctor, lawyer, or engineer. And that's how I also managed to go into an MBA, and because I went to the corporate world. But thank you for sharing your journey, sir. So, Professor Alam, let's now talk about banking and fintech regulations. What are some of the more significant challenges that are faced in regulating fintech companies today, and how can regulators balance innovation and consumer protection?
I think this is also, I have to give you a background. See, financial services or a banking is a very old industry, industry which is very well regulated and governed by the regulators and policymakers, because financial system is the backbone of any economic system. If your financials are strong, economy will perform well, and that's why it's very heavily guarded. But in the last 2 decades, the digitization of the financial services has been tremendous. Every few weeks, every few months, you will see new development happening. In fact, if fintech is not a new concept, if it is something like fintech was originally coined by Citicorp in 1992 when they established a unit within the Citibank looking into the technology aspect of financial services. But fintech was never a buzzword until the global financial crisis, and when the cryptocurrency became like a mainstream. People started talking about in 2011 when Bitcoin became a bit of a hype. Everybody wanted to buy Bitcoin. So that's how the fintech came into the picture. Now, when fintech came, it became a buzzword or a common thing. A lot of development started to happen around the financial services, like talking about internet banking, for example, talking about blockchain application, AI application, and so on. Now, technology moves at a very fast pace, whereas the regulation is a slow pace, because if you have to pass any regulation by the central bank or even by the ministry, you need to have to go through a consultative phase, which takes a lot of time. You need to consult a lot of stakeholders, users, providers, as well as the other stakeholders in the ecosystem. Now, the technology evolves so fast that it gives a less opportunity for regulators to manage that. And also the type of technology risk has evolved. Earlier, the risk was basically your market risk, your economic risk, your interest risk, and so on. But now you have technology risk, for example. You have data risk, for example. And now this risk becomes more and more embedded into the system. So it gives you a different platform for the regulators to think about. So, and most of the regulators, if you see into the regulatory system, they are well trained into the economics and finance. They were not a trained technician. They don't know about the concept of blockchain, for example, or regulation of technology, or looking at a supervision of technology, subtech, and so on. There are a lot of tech terms here, Mr. Ashutosh here. So what happened? The regulators started to feel a pinch there. So now most of the regulators around the world are making sure that the regulatory team are very well versed into the technology applications as well. So now basically the fintech regulation is an evolving area, and is trying to look into the regulation surrounding the technology application into the financial services, whether how a blockchain can be regulated, or how crypto can be damaging to the overall economic system, for example, because very much fluctuating, right? The values of crypto fluctuate a lot. So how does it, a lot of challenges happening in the economy, whether the value of the money can be depreciating in that sense. People will move away the money from traditional equity and bonds towards the cryptocurrencies or NFTs and so on. So a lot of things goes around that ecosystem. So controlling and protecting the users as well as the provider is the main motion of the regulators, and that's how the fintech regulation ecosystem works.
Amazing. What a great response. Thank you, sir. And you just spoke about the cryptocurrency. So my next question is, how can risks of innovations like cryptocurrency and blockchain be regulated so that the average individual is protected?
See, any innovation always have two sides of a coin. Innovation can be used for good, innovation can be used for bad. In the similar way, cryptocurrency is based on the concept of blockchain, and blockchain is a revolutionary concept which is trying to reduce the intermediaries and try to make it decentralized approach. Decentralized in the sense that when we do a normal banking transaction, it will always be centralized. A customer goes to the bank, and bank will do the transaction and will move the money from one bank to another, and so on. So you need a intermediary to process the activity. Even if, for example, if you want to buy stocks and all, it goes through the intermediary channel, where the blockchain has come into perspective to remove the intermediary centralized finance and make it decentralized, where the user will interact with each other, the buyer and seller will interact each other without having the need of the intermediary. So the concept behind crypto is revolutionary, blockchain or cryptography, for example. But the application side, where people started abusing the concept of blockchain, especially in the concept of crypto, it became speculative. A lot of cryptos are being designed and developed is more from the from speculative purpose, where people will invest and people can even run away all with your investment. I will say the concept of the cryptocurrency is not bad, but some of the crypto has brought bad names. In fact, cryptos can be untraceable because it works on your IP system. You will have your own um, address of the where you are holding your wallet, and it cannot be tracked in terms of where how the money is moving from one place to another. So a lot of dark side of crypto happens that. But if you look into the positive side of it, definitely it is another form of a mode of payment. You can use crypto to buy, sell, and so on. And a lot of underlying wallet has been designed on the cryptocurrency, so you can purchase, you can sell, you can invest. So it should be treated as a innovative solution, but people need to be cautious when they are dealing with it. One thing which has come now, we have come a very long way. Previously, there was no regulated exchange, like how SEBI works in India, right? Stock Exchange Board of India, everything is regulated, goes into that. So we need to have a regulated exchange which deals with the cryptocurrency. So if you are buying and selling via regulated exchange, you are in a better shape to protect yourself rather than buying into Ponzi schemes or going through the informal way of it. So anything which is not regulated will always be a problem to invest into crypto and so on.
Very well said. And given the fact that we live in a region which has got so many different countries, each country has obviously got its own set of regulations. How do different countries' approaches to fintech regulation compare, and what lessons can be learned from the most progressive regulatory environments?
See, this is one of the challenging area about regulation. This is nothing new. Harmonization of regulation has always been a challenge. Some countries, especially if you look into the G7 countries or into the industrialized nations, they will be always upfront in terms of speaking about it and seeing that how do you protect the consumer. End of the day, it's all about the protection of the consumer. That's why the regulation is being designed. Now, fintech is one area, and not only on fintech, I will talk about any technology related, even the AI regulation, which is also in the same space. What's happening here, it is still countries are using it as per the expectation of the user in that country. So if you have a demand for a well-guarded ecosystem, there will be more proactive measures by the regulators. Currently, there is only one country which has passed the AI Act, which is the EU AI Act. The other countries are still in the process of developing and legislating it. Even in India, a lot of conversation is happening about AI regulations or fintech regulations. But people or the regulators learn from each other. So if I have to look into the benchmarking, I work very closely with the FCA in the UK or MAS in Singapore. These are some of the regulators which are way ahead of other countries. Again, it is a very early stage of development. When the product and services start to happen in the market, regulators start to look into what can be the challenges, what can be the risk involved in that, and that's how they start to look into the regulatory aspect of it. Until unless it becomes a mainstream. So in finance we always say that too small to ignore and too big to fail. For example, sometimes if you are too small, people will say, okay, we don't have to worry about whether it need to be regulated or not. But when it becomes too big, you can't allow it to fail as well, because it becomes a part of the ecosystem. The same thing happened in the global financial crisis, when you're talking about how it became so big that it connected the whole world, and it led to from one country to another to default on their securities, for example. The same thing is happening in this world. The more and more people start using the technology or the financial services, which is like mobile payment or wallet or NFTs or cryptos, and more people are going to make losses, will drive the regulators to start thinking about it. The good thing is that some jurisdictions, as I mentioned earlier, especially UK, EU, Singapore, Australia, they are much ahead of it, and they are also sharing the best practices. So it's not like, a bulk of the training. I also involved in some of the training here at the Security Commission, especially looking into the risk management, and I have trained a lot of regulators who come as a part of these security commission exchanges. It's like an intra organizational support for each other. So people are learning from each other, jurisdictions are learning from each other, and they are trying to come up and harmonize that thing. But I'm also aware that it will take time to have a global standardized regulatory approach towards fintech or AI. It will take a lot of time to do that.
Very well said, sir. So now I want to move to another segment of our conversation, which is about the financial markets, and that's an area you have a lot of expertise. My first question is, and this I know a lot of our young viewers and listeners would love to hear about, what are some of the significant trends currently shaping global financial markets?
See, the trends which are shaping financial market are not financial. It is external to financial.
Right.
The biggest is your geopolitical scenario, what's happening at the moment, So it is, people need to be aware of what's happening globally. They can't just look into the interest rate. They can't just look into the currency fluctuation. They can't just look at the economic data of any country. You also have to be aware of the supply chain, what's happening, the logistical issues, the geopolitical tension happening, and also the political changes, because these are going to drive the economic policy of the global world, especially where the big players, I told about G7 countries and how the economic policies of these countries, who they are supporting in the geopolitical front, and how it will shape it. So that's the macro factor which is more prominent, because it's easier to predict looking into the financial indicators, because there are some trend, right? And based on that trend, the upside and the downside, you will be able to cushion yourself where to move and how to protect yourself, whether you are risk taker or risk averse. But you can't predict the external environment. You never know which other countries are going to involve into the Middle East crisis, for example. Suddenly there will be a oil scarcity, for example, and then people will start looking and diverting their money from equities, maybe towards gold and towards crypto and so on. So a young investor should be aware of everything. The advantage of current world is that information flow is swift, it's momentarily. You get to know about what's happening in Middle East or in the US by just going to Twitter, or just going to LinkedIn, or going to Facebook, rather than going to look into any news channel, because that will take time for people to reach there. So a young investor should be aware of the surrounding, what's happening, and where they are operating. The second thing is that it has become more important for investor to diversify their investment in the current world compared to any other time. Because in the previous, yes, you can have a mix of equities and bonds and some materials like gold or silver or diamond, for example. But right now, you also have to look into for example, I'm not a supporter of crypto, but if you really want to be also protective of that, you can also invest some money in crypto, for example. You can also look into hybrid type of investment opportunity. Look into different domicile. The growth opportunity is not happening in the developed part anymore. It's always happening into the developing world as well as the underdeveloped country. The biggest growth will happen in the Southeast Asia, including in Indian subcontinent, as well in the African continent. So these are the markets where you need to look out for the development. Another area to look into is how to diversify between different sectors, for example. That can be based on, definitely technology will be a driver for the next 5 to 10 years, especially the amount of changes happening. But we should also not forget about the real world investment as well happening into the real asset as well. So that is how the current investor, young investor, should look at the macro factor and then play around with the sentiments.
Very interesting. And what measures can be taken to enhance transparency and reduce market manipulation in today's digital world?
It's very difficult, I will say. One of the thing, the dark side of the technology, which I will call the machine learning algorithm or robo advisory, which drives the investment. I'm talking more from the high net worth individual or the investors, institutional investors. So it is, you can't trust everything. First of all, you need to verify the information. A lot of deep fakes are happening, a lot of fraudulent information are being shared. You cannot really verify the veracity of these information. So first thing what investors should know is to see that what is the source of the information, where they are getting, can that be validated? You should not be looking into just forwarded messages or just looking into some website which are not very well established. A good way to look into, I will always believe the power of social media. I am very active on Twitter as well on LinkedIn. A lot of conversation happens around these risk element, about the regulatory changes, about the policy being driven. So if you are able to understand the overall ecosystem, use the technology, use social media for information gathering, and use that information gathering to make some assessment about your risk profile. An investor should be able to do that. Transparency has been a core concept of it. So I will say that do not believe anything blindly. A lot of misinformation is happening. Even, for example, currently one of the largest democracy, for example, India, when we went through the election, a lot of things were talking about the misinformation about that. A lot of people believe things on surface without validating the information. The same thing happens in the financial world as well. People will say this particular sector is doing good or this particular company is going good. You invest into this company. No, go and do your homework. Look at the background. Who are the supporters? Who are the investors? How much is the profile? When are they listed? Who are the share owners? So a lot of information can be digged. The benefit is that you can get all the information these days because they are publicly available information. Compared to 20 years ago, where you have to go to the stock market and look into the filings and find out about what are things. These are you can just with the click of the mouse you can find. So validate the information. Don't treat the information on the surface, and look for respected and trustable information source to make a decision.
Amazing. So I have time for one more question, sir. I'm trying to decide what to ask you. But maybe the question I'll ask you is, how do you see the integration of fintech solutions affecting traditional financial markets, and what opportunities or risks does this present?
This is a very long question, and this is one thing which I usually teach in my fintech program or a fintech course. One of the reasons what fintech was mandated or fintech became popular is to solve the problem of financial exclusion. So basically, if you even in the current Indian ecosystem, if you see, a lot of people are excluded from the financial system. They might have an account because there was an agenda to create everybody to have an account. But how many people use the account, for example? If you have to go to just to update your bank account details, you have to queue up and spend many hours. I'm talking about the public sector banks, for example. Still, the consumers are at loss in terms of the timing. Suddenly, the bank will close, and you will take ages to complete that thing. The whole purpose of fintech growth was it should be borderless, it should be time efficient, it should be cost efficient, and so on. So for example, I always talk about, for my example, if I have to do a normal TT transfer from one bank from Malaysia to India, for example, I have to go as a foreigner, I have to go and bring my passport and queue up and all that. But now I have digital accounts from global banks, for example, Wise or Revolut. These are digital bank who doesn't have any physical operation. They are borderless bank. You can do your eKYC, and once you have done that, you can move your money swiftly across the world, and you can still be regulated because the regulatory body is looking at the movement of your thing. So fintech was basically created to overcome the challenges of traditional financial services, which is time consuming, which is costly, and which is not user friendly. So these are the three important pillars which fintech is trying to solve. Payment is only one component. I know in India people use UPI, and you can do, everybody has the QR code wallet, and you can do that, but that's only one component. What about financing, for example? What about investment, for example? What about even saving, for example? How quickly you can open a bank account, how quickly you can do your banking transaction, how cheaply you can do your banking transaction. So these are the drivers of fintech, which is going to, and that's how somehow even in India it's still not changed much. I am very honest to say that, talking to my friends who are in banking sector, still the pace of traditional services to modernize themselves or become more user friendly is slow. But if you go into developed part of the world, if you are not listening to customer, you are out of the business next day. So the traditional has now become competitive, right? So in order for them to survive, they are also applying technology to modernize or digitize the services. And in that aspect, they are able to come closer to fintech. So fintech has given an opportunity for traditional financial services to be more resilient, to be more agile, and that's how it's going to benefit the customer.
Very interesting. And on that note, Professor Alam, I just want to say thank you so much for speaking to me about your journey. It's amazing how from one career you now are a world expert on fintech regulation and finance. Thank you for speaking to me about regulating fintech companies. We spoke about cryptocurrency and blockchain. We spoke about some of the significant trends in the financial markets. You also gave us a lot of very good advice for the young people on how important it is for them to be able to aware. They must be aware of what is happening in the world, because everything is available in the financial in the public domain. And finally, you also told us about how fintech solutions can impact financial markets. Thank you for speaking to me, and
Thank
good
you
luck
for
to you.
having me. Thank you. Thank you for having me.
Thank you. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.